what was the tipping point where the venture capital community embraced this idea, and how did you get them on board? Because I know you raised like a $30 million round, and before that you raised like 10 or something.
Mm-hmm.
How did you raise the money for this idea? Because let's face it, people were kicking you out of locations. They were taking your picture and posting it at the security desk. Don't let this kid in again, with your crazy idea.
Yes.
Did VCs do the same thing, or did they think you were crazy like a fox?
Yeah, it's interesting. So I actually had really never wasn't familiar with the VC world. Like I was like a small business entrepreneur, salesman, kind of, and based in Chicago. And so when I got started, it was really like, I'm going to build a nice small business. Like it could be impactful, but I wasn't
Lifestyle business.
Yeah, like exactly. I want to solve this problem, but it can be a nice little like organically growing business. And all of a sudden, the demand took off. And what I realized is that the business needed a bunch of infrastructure to scale, and I needed to raise capital. So I actually read the book, like How to Be Smarter Than a VC. And because actually someone wanted to invest in the business, they were like, "You have no idea what you're doing. Read this book." And then
I've never even heard of this book. How to Be Smarter Than a VC. Was it good?
Yeah, it's great. It's like if you Google like
VC,
it's like the #1 seller on Amazon.
Perfect.
So I read this book, and then I built a pitch deck, and I went around and actually we had like angel investors and people like that in Chicago. But I got really lucky. We met with a VC group that happened to be in Chicago for the weekend and visiting some of their LPs. And I fed them lunch, and I thought it was kind of just like a meet and greet meeting. And they made an offer on the spot.
Wow.
And so it was a very unusual situation. We had a couple of angel investors lined up, and they said, don't go that route. You need to go the VC route. And I went home. I talked about it with a bunch of people and decided that was the right path. But then we really didn't fit the mold of a traditional VC business.
No.
At all. And so it was very difficult for the next round to, get people, especially where they sort of actively don't want you to own things or move stuff around or do like operations.
Yeah, they're like, make it a marketplace, sell software to other people to make machines. Do not take this on yourself.
Yeah, exactly. Yeah. And we're sort of saying like everything about this business, because we haven't talked about it a lot, but we actually make all of the food. We distribute all of the food, and we own the whole experience from end to end.
Right.
And we're literally cutting avocados on the line, making dressings from scratch. Like that's what makes the product so good.
It's full stack. It's fully integrated because you have this new format. It's got to be done to your specification. I mean, of course you could outsource it, but if you outsource it, then that product is being optimized for a different reason than customer delight.
Exactly.
It's being optimized so that co-packer can put in the worst low quality avocados to make money off of your customers, as opposed to getting your customers to come back.
Exactly. That's like, and they're actually trying to amortize their R&D across like 5 different customers or 20. And so they're selling your hard-won ideas to someone else.
Right. You're educating people.
Exactly.
You're
and
like, cut the slices like this.
We're like, no, we have to do this. And so actually for our second round, most VC investors were like, this is nuts. You have no chance of success. Yeah. And good luck. And so,
really? They told it to you like that?
Well,
or you interpreted that?
In different ways. Some people were direct. Some people just never got back to me. But you got the message, right? And
when they said it in a direct way, I'm curious, how did they phrase it? Like, what was the most candid way somebody phrased it? Most brutal?
This is not a VC business. You should, not even think about it.
Right. And don't raise venture capital.
Yeah, exactly. And
which is actually
like a good advice. And actually I was going to say, like, he was very direct, but he's also a close friend. And someone who he actually worked at Redbox and was like the first person that educated me on how to build this company. Like I had one fridge, it was working, and he happens to be a VC. And so I went to him to get money, and he was like, no.
I won't touch this with a 10-foot ball.
Exactly. I'll help you, but I couldn't invest in this business.
Well, I mean, why do you think VCs don't like your business?
Well, so I think it's changed.
Well, why did most not like it initially? Then why do they like it now?
Yeah, so I think initially
yeah.
It was really this idea that you had to have physical infrastructure, and the scaling was going to be hard. Like we'd hear that a lot. Like, how are you going to scale this up? And it just seems too hard. And there's all these executional risks.
So the infrastructure and the complexity of the business made it easy for venture capitalists to say no.
Yeah,
but you got that first slug of capital. Who was that bold VC who deserves credit for when they zipped through Chicago on the LP meeting?
It's a firm called Great Point Ventures.
Great Point Ventures, as opposed to Bad Point Ventures. Great Point Ventures. Never heard of them. Where are they based?
They're based here in San Francisco.
Great.
Yeah.
Wow. Big fund, medium-sized fund?
It's about a $200 million fund. They're now on their second $200 million fund. And,
was their first fund when they invested in you?
Yeah, we were like one of their first investment.
I tell this to founders all the time. Oh my God. The best thing for a founder is to find a first-time fund. You know why?
Why?
Because they need to put the money to work. They got no track record, and they're going to have fresh eyes, and they might want to try something.
Yeah,
the way we say it in the industry is they might jump the fence. They might take a risk, right?
Yeah, I think that's true. I think they were looking at this and they were saying we've got a lot of time, and we can make a bet on a few of these like small high risk bets.
Yeah.
And especially early in the life cycle, whether it's their first fund or early in the fund, I think they're more open to that for sure.
How did you convince the oldsters, the people who've been at venture capital for 3 decades, 4 decades, 2 or 3, 4 decades, to and they're on fund 5 or 10, to come in and invest in what you're doing?
So I think really what changed is we showed we could scale the company. So we had actually scaled into Chicago. We were now at 150, on our way to 250. It
was
fridges.
Undeniable. The traction was undeniable.
Yeah, it was. And a lot of the initial objections about like, can you scale this up, or is it a fad? We had proven we'd taken a lot of those things out of it, and we'd actually shown that we were able to leverage the data that we were collecting to optimize the menu and create like really compounding like 3-4x growth. And so it was like, oh, this is actually a really compelling unit model. You are disrupting the way that food gets to market, and in an environment where restaurants basically have rising retail, like every cost is going up.
So the retail apocalypse, not being able to get workers minimum wage going up, the competition for workers who are hitting the gig economy and saying, well, why would I go do a shift at this restaurant when I can do Uber whenever or Lyft whenever I want? And I don't have to deal with a boss dragging my ass into the same location. Just pop in my car, do a couple of rides, get out, go to the movies, and do a couple more rides or pick up my kids. Like, it's hard for a fast food restaurant to compete against Uber, Lyft, and other alternatives because they pay more.
Right, exactly.
And you're your own boss.
Yeah.
You have no boss. Really, the whole thing that people miss about the gig economy is not having a boss, because bosses are a-holes almost universally. I'm listening over there. I'm listening over there. I'm listening over there in the engineering room. But they are. Yeah. And not having a boss is so nice and delightful. You feel agency in your life. There's nobody coming in telling you what to do. But that was a big headwind against these restaurants. Here in San Francisco, the mid-tier restaurants are starting to put kiosks, iPads in, and kiosks. And you're like, wait, this is a restaurant, not with a tablecloth, but this is a restaurant with a $20 entree. Yeah, and I'm ordering from an iPad. Really?
Yeah.
And then you do it and you're like, thank you.
Yeah, that was because it was totally seamless.
I was really annoying to have this like 20-year-old like actor be really pissed off at me for their life and having to be a waiter and then get my order wrong because they're not paying attention. Like, it's so nice to use that kiosk.
Yeah, so I think that's a good example where you had these outside forces starting to converge. So like what we had been saying for 3 or 4 years, now it was very obvious. Like the business could scale. You're seeing people move to kiosk ordering. The unit economics of like delivery had become more clear. So there was a bunch of startups that when we were just getting started out here that were doing like individual drops. And through,
like Postmates, you mean, and stuff like that?
Yeah, but like actually making the food and dropping it off. And,
yeah, we had a company we invested in called Bento.
Okay.
And then there was that was doing pre-prepared meals to your home for $12, and you really had to charge $15 an entree to make it work. But it was a really hard business.
Exactly.
Food waste, etc.
Yeah, and so people kind of got it all together.
Yeah.